Welcome back to Investing Talk Podcast.
Today we're looking at Oklo.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. I think the best place to start is with the biggest news, the thing that's really driving all the momentum here.
The Ohio Project.
The Ohio Project. We are talking about a massive, and I mean massive, 1.2 gigawatt nuclear energy campus planned for southern Ohio.
That is just a staggering amount of power. And, what makes it so critical isn't just the scale, it's who the anchor customer is. Okay, let's maybe unpack this a little.
Right. They've secured an agreement with a major social media and AI technology company, Meta, to be that anchor customer.
And they're not just like signing up to buy power down the road. They're putting money in up front.
Exactly. They're prepaying for power and providing significant development funding right now. This is the explicit link between Oklo and this, booming AI supercycle narrative.
Which you have to have. Because the power demand from generative AI is it's off the charts.
It's insatiable. A single hyperscale data center can use hundreds of megawatts. That's a small city's worth of power running 24/7. And they need it to be clean, reliable, and baseload.
And only nuclear really checks all those boxes without needing, 1,000 acres for solar panels.
Right. And that 1.2 gigawatts, just for scale, that's enough to power roughly 800,000 homes. It's enormous.
But it's the partnership structure itself that really seems to de-risk these early stages, doesn't it?
It's the game changer. I mean, Meta's funding is what's going to secure the long-term nuclear fuel supply. It's what's going to advance the first phase of the Aurora Powerhouse deployment in Pike County.
And it's on land that was formerly, a Department of Energy site?
A DOE site, yes.
Yeah.
The old Portsmouth gaseous diffusion plant. So you're building new, clean infrastructure on federal land that's already sort of earmarked for this kind of redevelopment.
So that funding and the site surety, that moves a huge amount of the capital burden off of the company's balance sheet and onto a project finance structure that's backed by a blue-chip customer.
That's it, exactly.
So what's the timeline look like? I mean, when does this power actually start hitting the grid?
Well, it's a long-duration play, which, is standard for this kind of major infrastructure. Pre-construction is slated to begin in 2026.
Okay.
And then the first phase, the first megawatts, they're targeting as early as 2030. From there, it scales up unit by unit to hit that full 1.2 gigawatt target by 2034.
So this is a true infrastructure play. We're talking about a time horizon where a high school freshman today would be, out of college by the time this is fully ramped?
That's a good way to put it, but this isn't happening in a vacuum. The location is highly strategic.
Right. You mentioned Ohio. Why there? What about this PJM interconnection?
So PJM is essentially the massive grid operator for, I think, 13 states and D.C. It covers the Mid-Atlantic and parts of the Midwest.
So being in PJM means you have access to one of the biggest electricity markets in North America.
A huge market advantage right there. And it also aligns with this big push to redevelop that former DOE site into a clean energy hub. You're adding critical baseload power right where it's needed for these massive data centers, like Meta's cluster in New Albany.
Plus, you're creating thousands of jobs. It's a very compelling story.
It is. It's a great alignment of tech, energy, and economic development.
Okay, so the site and the customer are huge. But all of this conviction really hinges on the technology. So let's dig into that core moat. The Aurora fast reactor. Here's where it gets really interesting for me.
It is. So we're not talking about your grandfather's nuclear plant with the giant cooling towers. The Aurora is a fast-spectrum liquid metal cooled reactor. It's a totally different architecture.
Designed in smaller modular chunks.
Right. From about 15 megawatts electrical up to 75 per plant. And when we say fast, what does that actually mean? Is it faster to build, or is that a physics thing?
It's all about the physics. Conventional reactors, they use water to slow down neutrons. A fast reactor uses high-energy, fast-moving neutrons.
And that's the key. That difference is what allows it to burn different kinds of fuel, specifically nuclear waste.
And that leads to the big operational advantage.
Yeah, the huge one. It's designed to run for 10 to 20 years without ever refueling.
Wow. 2 decades.
Yeah.
That just completely changes the economics.
It makes it much more like installing a permanent battery than managing a traditional plant. And from a safety perspective, it's building on literally over 400 reactor years of operating experience from a U.S. government program, the EBR-2.
So this isn't some brand new, unproven theory?
Not at all. And it has these passive inherent safety features. Basically, the physics of the reactor cause it to shut down if it gets too hot. It relies on physics, not on operator action. They call it walkaway safety.
Which is critical for selling to big, risk-averse commercial clients. But the real ESG moat, the thing that I think gets everyone's attention, is this waste-to-fuel concept. They're actually designing it to run on recycled nuclear waste.
That is the heart of the value proposition. They're effectively taking spent nuclear fuel, which is this huge liability the industry has struggled with for decades, and they are turning it into an asset. They've already been granted access to fuel from the Idaho National Laboratory for their first reactor.
But wait, I have to challenge that a little. Recycling spent fuel, it sounds amazing, but isn't the upfront cost of that process, pyroprocessing, incredibly high? How do you make that make economic sense?
That's the critical question, and it comes down to their vertically integrated strategy. Yes, the upfront capital for the recycling facility is high, but your long-term cost of fuel is effectively zero, or even negative, since you're getting rid of a liability.
So you're creating a closed fuel cycle, free from the volatility of the global uranium market.
Precisely. And because you're targeting these specialized customers, like AI data centers who demand that extreme reliability, you can command premium pricing. That helps offset that initial cost.
So they're not trying to compete with utility scale power on price. They're selling a premium high reliability service.
Exactly. They are built for off-grid and dedicated load customers. Think data centers, defense installations, remote industrial sites. It's a power-as-a-service model with long-term contracts.
Now, beyond the huge Ohio project, there's another piece to this that investors might miss. A second, sort of faster-moving leg of growth.
Right, the radioisotopes. This is the nuance that people need to track. Through a subsidiary, Atomic Alchemy, they're developing a pilot plant for medical and research isotopes.
And that's a higher margin, shorter cycle business.
Much shorter. And it provides a potential stream of cash flow years before the first big power reactor even comes online. It's a really smart diversification play.
And the government is helping accelerate this side of the business too, right? Through a DOE agreement.
Yes, that is absolutely key. It's being developed under what's called an Other Transaction Authority, or OTA, agreement.
What does that do?
It lets the DOE bypass some of the really long traditional federal procurement rules. It's designed to fast-track cutting-edge technologies, so it's a huge accelerant for getting that isotope business up and running and generating revenue.
If we connect all this, it feels like they have this major regulatory head start, a competitive moat against their peers.
A massive one. I mean, they were one of the very first advanced fission companies to even have an application accepted by the Nuclear Regulatory Commission, the NRC. They have a DOE site permit. They have the fuel allocation from INL.
And that's the hardest part of this business, isn't it? The regulatory maze.
It's by far the most complex and time-consuming hurdle. Having that lead, being able to reuse that learning curve and that documentation, that's an almost insurmountable head start.
So how does this really differ from the other small modular reactor developers we hear about, the ones using more conventional water-cooled tech?
The difference is really in two places: the fuel cycle and the customer. Most SMRs are just miniaturized versions of existing tech. They need new fuel, and they target the general utility grid.
Okay.
This model is about the waste-to-fuel cycle, making them self-sufficient. And they're targeting that high-margin niche of dedicated customers. It's a fundamentally different, and I'd argue less risky, business model.
Okay, so catalysts and tech are compelling. But let's talk financials. What's the reality of the balance sheet today?
The reality is they are pre-revenue. Free cash flow is negative. They are investing heavily in R&D and licensing. That's just the profile of an innovative infrastructure company at this stage.
Which raises the big question. How are they funded? And what's a runway like?
Well, despite the negative cash flow, analysis characterizes them as having strong cash reserves. And they're being strategically smart, leveraging those DOE sites and federal cost-sharing agreements. And most importantly, the Ohio project uses that project finance structure backed by Meta.
Right, so the corporate capital intensity is much lower than you might think.
Yeah.
It's all about reinvestment for that long-term growth.
Exactly. And that strategy has fueled this incredible technical momentum in the stock. It's a high beta name, very volatile, but we've seen, what, a 300% gain year to date?
And these huge single-day pops, like 14 or 15%, driven by policy news like the DOE's uranium enrichment announcements.
Right. That's the government signaling a strong commitment to the whole nuclear sector, which lifts all boats.
And that kind of performance builds a lot of sentiment. We've seen the stock challenging that $100 psychological level, but we also have to touch on the optics of the insider selling.
It's a necessary check. The CEO, Jacob DeWitt, did sell a significant number of shares, but you have to see it in context. It was after a multi-100% rally. The analysis suggests it's likely diversification and profit-taking, not a negative signal about the company's future. The market seems to have absorbed it.
Okay, so with all that in mind, we have to be balanced. What are the core risks? What could cause this whole thesis to unravel?
The challenges really fall into three main buckets. The first and the biggest is execution risk. Getting those NRC approvals is complex, it's time-consuming. Any delay in that 2030 target for first power would be a major setback.
And these kinds of projects are notorious for delays, so that's one. What's next?
The second is financing risk. Building the first-of-a-kind nuclear plants is just incredibly capital-intensive. Cost overruns are almost, endemic in the industry. That could lead to future capital raises and dilution for shareholders.
Even with the Meta prepayment, the total cost for 1.2 gigawatts is going to be immense.
Immense. And the third is simply valuation risk. This is a highly speculative stock right now with zero commercial power revenue. The valuation is built entirely on optimistic expectations for a decade from now.
So it's incredibly sensitive to any slip-up.
Any slip in the timeline, any change in the AI narrative, or just a shift in the market's appetite for risk. If 2030 becomes 2032, you will see a sharp negative reaction because the market is pricing in perfection.
So to summarize the core thesis for you, Oklo is a high-beta, long-duration call option on two huge trends, AI power demand and the nuclear renaissance. It's banking on differentiated tech and strong government and customer backing to get from pre-revenue speculation to contracted cash flow.
Correct. And given that, this is best suited for a multi-year hold. Think 5 to 10 years. You're focused on compounding value through those major milestones. The NRC licensing, signing more AI contracts, deploying that first reactor, and scaling up the radioisotope business. That's how speculative value becomes real.
That gives you a clear framework for tracking this going forward. Keep an eye on those regulatory milestones because that's where speculative value turns into realized value. Make sure you subscribe to stay current on all the major movements in the markets.